Good evening, ladies and gentlemen. As introduced, Nigel Robinson, CFO of Central Asia Metals PLC. Just like to talk you through our company for 20 minutes and show you some of the highlights and actually what we do in the Central Asian region. I think the first thing probably to note is that we listed almost 6 years ago to the day and raised $60 million, of which $48 million was earmarked to build what we call an SXEW plant in Kazakhstan, solvent extraction, electro-winning, and the purpose of that plant is to produce cathode copper, and I'll come on to that later. Our main asset is in Kazakhstan, as most of that money was raised for that, and we now have a development project also in Chile, which is one of our business development opportunities, which I'll talk about later as well. What do we do actually out in Kazakhstan? Well, effectively we do in situ dump leaching. That means we irrigate dumps, and then from that irrigated solution we process it into pure cathode copper at extremely low costs in the industry. A C1 cash cost of 40 cents per pound, and I'll make that clearer later in terms of where we are in the industry profile for the production cost of producing copper cathode. We have a resource that's accessible to us of about 600,000 tonnes of contained copper, of which we estimate we'll recover around 250,000 tonnes of that from the process that we've put in situ there. We have cash in the bank still from the IPO and from the operations over the past 4 years since we've been producing copper, $30.2 million at the end of June, and we don't have any debts on the balance sheet. We're currently just going under a self-funded expansion scheme, and I'll touch on that later, to extend the life effectively of the project, having already taken a stage 1 expansion to increase the output capacity of the plant that we built back in 2010 to 2012. And uniquely in the resource sector, for those of you who might know it, we actually pay dividends. We started a dividend payback process back in 2012, and we've been paying back dividends ever since that time. And we've now paid back in excess of what we raised at the IPO, as I say, 6 years ago. And we have a 75% interest in a Chilean asset, like I mentioned a minute ago. Like the previous presenters, we also just finished a roadshow about 2 weeks ago where we announced our interim results for the first 6 months of this year. And just a few key highlights on that. We announced a 5.5 pence dividend, which was 26% of that period's revenue, 26% of the gross revenue, that is, not profits, but revenue. Our production was a record for us, close to 7,000 tonnes of cathode copper. It's pure copper, 99.998% copper. And the Ebitdar, which is the interesting point here, you'll see $17.4 million. That was on a turnover just shy of $31 million, giving an Ebitdar margin of 56%, should I say, for that period. Just a chart to show how our share price has performed since we listed 6 years ago. This here, you can see, is the copper price, which has gone against us in many ways. At one point, it reached $10,000 per tonne. It's now trading around about $4,700 per tonne. It's almost 50% the price that when we listed. And when we first started producing, it was around about $8,000 a tonne. But despite that, you'll see our share price has actually gone up. It's increased. And I think that's primarily because we pay a dividend back on the profits and the cash flow that we generate from the operation. You can see how we've done against our peers in the sector, in terms of the mining sector, which is a bit down in the doldrums at the moment. We've tended to buck that trend again, and I think it's primarily because we pay money back to shareholders. As we speak today, our share price is around about the £1.80 mark. We floated 6 years ago at 96 pence. Market cap's around £200 million, and as I say, we have cash in the bank with about 112 million shares out there. And just in terms of total shareholder return in the 6 years, and that's by taking what's the capital growth of if you invested in a share in us 6 years ago at 96 pence to the current price today, plus the amount we've paid back in dividends, which we'll come on to in a minute. The amount we've paid back in dividends since that time is, as you can see there, just over 50 pence. So add the capital growth plus the 50 pence, that's how you get that total shareholder return. And all this chart really shows is that we've paid back significantly more than we raised 6 years ago. And we have a dividend policy, just to emphasise what it is, which is quite unique again in the industry, which is that we will pay back a minimum of 20% of our gross revenue to shareholders. So say this year we were to generate $67 million of revenue. Actually, that's a difficult number. I might be the CFO, but I can't do it that quickly. Say 65, that's an easier one. We'd pay back $13 million at least in dividends to our shareholders. And you can work out what kind of yield that might give you, et cetera, et cetera. Historically, though, what we've paid back is closer to 30%. And the one that we've just announced recently, the interim dividend, was 26%. So, you know, it finds favour in the market. I think those who invest in the resources sector would find favour with it because it's giving money back to shareholders. And it gives a good rapport with our shareholders. Many of the institutions in the city where they would probably help us raise money should we need to do it on another project. So what do we do exactly, or what is the resource? Where is the resource? It's a huge asset out in the middle of Kazakhstan, about 600 kilometers north of one of the main cities there called Almaty. As you can see here, this is a huge open pit, and I'll show you a video in a minute for about 2 minutes, which will just fly you over the area and show you the scale and size of what we're talking about here. About 22 square kilometers it covers. We don't actually own this open pit here. This was mined by the Soviets and then Kazakh Mis for about 70 years. And it's about, as it says there, 1,500 meters wide, 500 meters deep, and it's about 2 kilometers north to south. So it's a huge hole in the ground. And in processing the ore that was in that porphyry, what they've put on the surface is what they classed at the time as waste. They couldn't either process it because it was below the actual grade they required in the plant, or it was oxide ore, and there was no technological process at the time to actually get copper out of oxide ore. So what we end up having, that we've now acquired effectively through a tender process, is ore here and ore down here that we're processing through this in situ dump leaching effectively, and then solvent extraction, electro winning. Just a little bit of history there about the actual asset itself. I suppose the key dates there are, you see when they started mining back in 1938, and there's a smelter about 20 kilometres south of here which processed most of that copper over the life of the mine. Then acquired by Kazakh Mis, resource effectively in the open pit was exhausted, and then we came along and acquired the rights to process what they call the waste rock there, of which very low grades of copper, but we're able to effectively process it at very low costs, which is what makes the business successful. Raised the money at 2010, and we've been producing copper ever since 30th of April 2012. We've now produced just over 47,000 tonnes of copper at the half year. So just go into a quick 2-minute video now. As I say, this will show you a bit of the size and scale. So we're flying in from the south. You've got the western dumps to the left, open pit there, eastern dumps just here, and there you can see the plant that we've built, SXEW plant, and I'll come on to that in terms of how it basically works in a minute. As we fly back over to the eastern area, this is where we've been doing most of our processing in the first 4 years. You'll see the striations, and there you can see the size of the dumps. We don't actually move any of that waste rock at all, and that's why it's low cost. What we do is we irrigate it by putting highly diluted sulfuric acid onto the dumps through irrigation pipes. These are the main trunk pipes, and you see very little small pipes here. Almost 9,000 kilometres of small pipes we put on there, just like your market garden feeders. We just put low, heavily diluted sulfuric acid onto it. Those blocks here that are covered with HDPE, those are our winter blocks. It's very seasonal in Kazakhstan. You get very cold winters and very warm summers, so we cover them. The solution filters through the actual rocks themselves and gets caught up in these collector trenches and then fed effectively into this, which is the plant, the SXEW plant. In simple terms, it's an anode and a cathode and it's electrolysis. So the solution, which might come in at 2 grams per litre, through a process of mixing it with reagents and stuff, we will get it up to about 40 grams per litre and then put it into an electrolysis section like this, electro-winning cells, and produce the cathode copper from that process. So a very simple process in many ways. These are the mixer settler tanks where you increase the tenor of the copper before it goes through to electrolysis. You'll see that we built a railway spur to tie into the main railway infrastructure, and there's your bundles of cathode copper, which sell at the moment for $4,700 per tonne. Production for this year, for the first 6 months, as you can see, I did say a minute ago it's fairly seasonal, so you can see these are the quarters in any 1 year, and you always see the first quarter and the final quarter is effectively get lower production because you can get down to temperatures of -30, -35 degrees on those dumps, but we still produce copper, but we can't get as much flow through the plant, therefore we produce lower levels of copper. And in the summer, while the weather's good and the temperature is a bit better, we make as much copper as we can to actually bolster the production for the year. We did have record production in the 6 months. That was a 27% increase between the two periods. And at the end of H1, as I say, we produced 47,000 tonnes of copper. Outlook for this year, as you can see, we've increased production every single year. When we first started, the plant we initially built from the $60 million we raised was a 10,000 tonne nominal capacity. We've actually done a stage 1 expansion to take that to 15,000 tonnes per annum, and the stage 2 expansion, which I'll talk about in a minute, is effectively to take the life of the mine over to 2034, the life of the licence. So we've got another 18 years life in effect. Our guidance for this year, therefore, is 13,000 to 14,000 tonnes of cathode copper. Stage 2 expansion, it's well on track. We're about 95% complete on that. We're well under budget, approximately 25% under the budget. We quoted to the market $19.5 million. We expect we'll come in 25% under that, and we expect leaching on those dumps in the western area to commence just as spring happens in 2017, Q2 2017. So just looking at it in a little bit more detail as you go, these are the eastern dumps you saw before on the video, and this is just a microcosm of what we do. Each of the dumps is split up into blocks. At any one time, we'll be irritating. We probably are irritating a few people. Irrigating, say, 3 to 4 blocks, and as the blocks are initially leached, then you'll find a high tenor of copper comes off them, and that gradually dies down. Leaching period maybe of 200 days. As one's dying down, another one's brought off so that you have a homogeneous grade, maybe 2 to 3 grams per litre going through the plant. And all this really shows you is how we've managed going round the dumps. There's the plant. We started with the initial area here, and we've worked our way round such that this dump is almost exhausted now. This one's almost exhausted, and we're working our way here. So you can see we estimate in total in this area, we estimated there was about 80,000 tonnes of cathode copper. We've actually, that's recoverable cathode copper. In situ, about double that, 167,000 tonnes. We've produced 47,000 tonnes. We reckon there's another 32,500 tonnes of copper in those dumps alone. Now, in actually processing that, if we didn't do the expansion that we're just on with at the moment, we probably only have another 2.5 years worth of life left, and therefore that would not be exactly too healthy for the business. So this latest expansion is to extend the life, as I mentioned. We will continue to leach in this area, and we'll transition away from the east to the west, and probably be leaching in this area for some time to come, actually getting small tenors of copper to actually increase the grade from the west as we put it through the plant. This schematic shows, as we've seen before, the size and scale of the actual open pit and where we're currently operating in the eastern area. And the stage 2 expansion, we estimate there's 446,700 tonnes of in situ copper, of which we're estimating recovering about 40% of that, 175,000 tonnes. So the money we're spending at the moment is to build 2 12-kilometre pipelines, one to take the highly diluted sulfuric acid that you leach with to the western dumps, to this initial leaching area, and then once you've actually leached in that area, to take what we call pregnant leach solution with the copper in it back to the plant, and then process it through the same plant that we've been processing from the eastern dumps. Pretty simple. Budgeted 19.5 million, and as I say, it's going to come in well under budget, about 25% under budget, and it's about 95% complete, with an expected completion date of the end of October in terms of commissioning. Just a few facts and figures. I've mentioned most of this. Expecting it to be completed by the end of October, and then it'll be commissioned. We're checking the systems, checking the pipes, checking there's no leaks, etc., and then switch it off for the winter. It gets very cold in the winter, and we'll start again up in the spring. Okay, finances. This is successful because it's low cost. Let's get that right from the start off. We can't really control the price that we can sell the copper at. We sell at LME prices. It's not governed by us. In world terms, we're producing 13,000 to 14,000 tonnes. The world is producing 20 million tonnes of copper per annum. So we're a very small beer in terms of the size of the market. but we do it at extremely low cost. This chart here shows all the world's copper producers and where they sit in terms of how much it costs them to produce cathode copper. We reckon the median there, and you want to be in the lower half of this when there's pressure on the copper price, is around about $1.60, and we're producing it at 40 cents per pound, whereas other producers in the median are producing at $1.60 per pound. That's just where you want to be when there's pressure on the copper price, so you can survive the market downturn if there is going to be any long-lasting downturn. How do we build up that cost? The cost of producing the actual cathode copper you saw there before, that's the reagents, power, labour on site, is actually only 26 cents per pound. We then have to ship it out to the markets. We have an offtake deal with a company called Traxys that take it from the factory gates at Balkash out towards Turkey, which is our main customer that we've had ever since we started producing. And then you've got some local G&A in the area for managing the process. As a fully inclusive level, because we've only got one project, it's probably a fair measure in our case, you then add in depreciation, a mineral extraction tax, which is effectively a government tax, it's a government royalty in Kazakhstan, and then corporate overheads in London to run the business. And you're still below $1 per pound, which many companies would like as their C1 cash cost, let alone fully inclusive cost. And all this table really shows you, since we started producing back in April 2012, we've steadily increased the production, but our average sales price has declined out of our control, but has declined from $8,000 per tonne almost when we started, down to $4,900 is the price we achieved in the first half of this year. Project revenue, first half of the year, 31 million nearly, and you can see the growth, you can see the fairly consistent revenue, but I guess the key thing here is look at those Ebitdar margins. 59.5% over that period is the Ebitdar margin, which allows us to do that dividend policy of 20% minimum on the gross revenue. And there you can see the dividends we've actually paid back to our shareholders, and each year the dividend amounts we've paid. We also pay, quite a bit of tax in the area, $74 million worth of tax. Tax is 20% on our profits, and that's the tax we've paid back locally in Kazakhstan to the government. And I suppose the final point I just want to mention on this particular slide is just this aspect here. You see a huge drop in our C1 cash cost from 60 cents to 40 cents. It's a bit like the answer to the Brexit question before. We sell in dollars. We generate a lot of our costs are in Kazakhstan tenge, and not many people maybe in the room will know, but the Kazakhstan tenge had an 86% devaluation last August. 86%. It went from 185 tenge to the dollar down to 350, 360, halved almost overnight. We benefited from that because 70% of our costs in Kazakhstan are in tenge, and therefore we've had a very good, if you like, favourable headwind against an unfavourable headwind of the copper price, effectively. Generates into cash flow. You can see for the period, we started the year, or the half year, should I say, at $42 million, now down to $30.2 million as we've spent money on developing the plant and the expansion phase 2, paying dividends to shareholders, paying tax, that's corporation tax, and then other amounts there. The thing to note about this is we've now spent 70 million developing Kounrad, but there's not a lot more capital we need to spend now. We've fully developed that plant, and we're fairly stable, and we would generate that kind of output of copper, 13,000 to 14,000 tonnes per annum, with very little sustaining capital running through the next 15 years. Just maintenance of the plant, maintenance of the anodes and cathodes, which will actually increase the cash flow that we get from the actual project. Bit on corporate and social responsibility. As any responsible business, we look after our staff. We make sure that they follow good health and safety regulations. We're very proud that we've actually got what we call LTI-free man-hours. That's lost time injury-free man-hours. We haven't had an injury for over 1 million man-hours on site. We do get inspected, both environmentally and health and safety-wise, and we've got a good record on that. We pay attention to whatever the output of it may be and make sure we rectify any problems that we've got. And we've got a good program for geological testing, hydrogeological testing, just to make sure that everything we do is above board in terms of the leaching process. And we look after the community locally. We've spent nearly $1 million locally in health and education schemes just to help out what is a pretty depressed area, all in all, from the activities of, over the past 70 years, and then there's a bomb burst as the mining sector disappears from it, and we've taken over a little bit. So all that excess cash flow, what we're going to do with it? Business development. We're looking at opportunities, but one thing I must state on this, we will not impact on the dividend policy that we have. That is sacrosanct's too strong a word for it, but that is what's made the company successful and keeps our share price high. So we will protect that at all costs in terms of how much money we give back from Kounrad to our shareholders. But what we'll do with surplus cash is look for growth opportunities. And that's what we're on with at the moment. We have a business development director looking at opportunities. This particular one, I won't labour too much, but we've spent $6 million to acquire a 75% stake in this asset. And it's a similar waste treatment type project in Chile on a beach. It's actually a tailings project, but it's a similar kind of thing where you buy process old tailings. It's got pretty good NPV. That's at a $3 copper price. So copper is now trading about $2.20. So obviously we need to look at that. And what we've been doing over the past year or so is investing in the engineering studies, etc., to come up with what they call a definitive feasibility study. And we'll be looking at that in the fourth quarter to see whether it makes economic sense. If it doesn't, then there'll be no qualms amongst the board to actually walk away from it. If it does, then we'll look at it and we'll invest further to actually generate more value. And that's what we've been doing on many other opportunities. This is just one, that Copper Bay project is just one we decided to go with. But Gavin Farrar, who works for us as business development director, has looked at over 100 opportunities in the mining space. Some, quick look and then cast it aside. Others we've done, gone fairly well down the path actually to look at it and decided for whatever reason it wasn't for us. It wasn't as cash generative. And that's not just because Kounrad is so successful and so low cost. We recognise that we might have to dilute a little bit because you're not going to get something at 40 cents per pound. But we are, as I say, very conscious that whatever we do must be accretive for shareholders in terms of creating value. And I think on that, the final slide, just to emphasise the key points of the business, outlook. Ebitdar margins above 50% with a C1 cash cost, which is well in the lowest quartile, lowest decile, dare I say it, if not one of the lowest copper cost producers in the world, although we don't say that because we don't know for sure that's the case, but we don't know many others that are lower cost than that. Very strong balance sheet, no debt, cash 30.2 million at the end of June, and a healthy cash flow. And, as I say, we will maintain that dividend policy, and it stands us out from the crowd a little bit. An ongoing lower sustaining capex to manage the business effectively on those cash flows. On that, I'll ask for any questions.
Any questions, anybody? Ooh, I've got lots of questions. A dividend payer, unusual, and that's what, it's about 6 to 7%, is it? Is it about that?
7 to 8% yield at the moment.
And second half of the year, you pay more than the first half by looks of things.
Historically, we've paid more for the final dividend. We pay an interim for the first half results and a final for the second half because normally we've had a higher production in the second half. But this year, our production, as you saw there, was close to 7,000 tonnes. We had a good start to the year because it's been a pretty mild winter. So we'll see. The board will decide what the final will be.
But do you think it will be less payment than this current year? Shouldn't be, should it?
Shouldn't be, but then you're going to nail me to a cross if it is.
Finance director.
No, but effectively, I must stress, the dividend policy is based on revenue. If revenue slumped completely, that's what we said, it's based on revenue, it's 20%. But we've always done better than that. We don't do it as a progressive dividend policy. So if you pay 6 pence one year, it has to be 7 pence, 8 pence. But we stick with the revenue.
And the other question was, when you bring phase 2 into online in a full year, what difference does it make to you in terms of turnover? Did it double your turnover, an extra 25%, 30%?
No, the stage 2 is effective to extend the life.
Right.
If we hadn't done stage 2, we'd be looking at maybe a 3-4 year life left, that's it, to really exhaust the eastern dumps. So stage 2 is effectively to extend the life out to the life of the licence, which is 2034, which is another 15 plus years in terms of leaching. But our actual output will be stable around that kind of level. The plant can produce 15,000 tonnes per annum. But as you can see there, I've probably glossed over it a bit, there's a lot of challenges on site in terms of, the winter, difficulties in winter. And we are moving huge volumes of solution out there. 2 grams per litre, we're moving any one day 24,000 tonnes of solution. So that's the challenge to the guys. It's the leaching that's the challenge as opposed to the SXEW.
And what risks...
Sorry, gentlemen.
What risks remain to the successful completion of your expansion?
I think on the stage 2, very little because it's 95% complete. We were out on site, myself and Nick, the executive chairman who's here, we were out on site with the board last week and, it's been tested, it's been commissioned. There'll be a few hiccups, there'll be a few teething problems. Obviously, there always is on a ramp up and a commissioning, but But no, I mean, the big challenge is leaching in the western areas compared to the eastern areas. But we've done as much testing on the western dumps as we did on the eastern dumps to prove up as best you can how they're going to perform. And they all perform differently, but you can only do so much test work, and we've done as much as we feel gives us the confidence to actually leach in that area.
You're pumping quite a long distance there. Is there any risks in clogging up and
No, I don't think so, because it's a solution. I mean, people, slurry and whatever, which is far thicker than this, they would pump that far further distances, as I understand. I'm not the expert in this, but I don't think, talking to the technical guys, the pumping's a big issue, and we've got the pump, the pumping capacity and output to actually move it the distances.
Thank you.
Any more questions? Gentleman there, and then two here.
I've got the microphone. Do you foresee any significant land reclamation costs at the end of the project?
Sorry, significant
Land reclamation costs?
We've got about $3 million on the balance sheet. It's a bit of a grey area, isn't it? Asset we certainly we won't be going to fill in the open pit or anything, if that's what you're thinking. We'll be maybe dismantling the plants and filling in some of the collector trenches. So the cost of it is pretty small beer, but I have to be honest with you, it's a bit of a grey area. What do you actually have to do? I mean, it's a pretty run-down area anyway, from 70 years of open pit mining. And we could argue in many ways we're cleaning up the area in what we're doing. So we are setting money aside. There is a contractual amount you have to put aside in terms of cash liquidated in the contract, and there is money on the balance sheet to actually take down the plants and say fill in the collector trenches and do whatever we need to do to rehabilitate the area.
Questions, Tim?
Do you expect the same recovery rates on from the eastern dumps as the western dumps, or is there a difference in the amount of contained copper expected?
No, it's a good question, that, actually. I mean, they are mineralogically, they are slightly different, and the eastern dumps are classed, or historically were classed as oxide dumps, and an oxide leach is easier than a sulfide dump. However, over 70 years, they've naturally oxidised. We've got acid-soluble copper levels that are the same east and west. So from a prudent basis, we are expecting slightly lower recoveries, and if you look to the numbers there, and go through the presentation, if you get a copy of it, you'll see we've been planning in some of the dumps in the east 50%, some of them 45%, and in the west, primarily, it's about 39 to 40%, with longer leach times and everything. But the impact on the cost is minimal in terms of extra cost to actually process it and leach it. We estimate another maybe 10% on those costs you saw there. So 40 cents for the west might become 45 cents, 46 cents, because you're using a bit more electricity to pump it round. But other than that, it's a question of irrigating it, and it might take a little bit longer for the PLS to come out into the collector trenches, but it's still got the same tenor of copper, effectively.
Final question at the back.
Can you say something about Kazakhstan's economy and whether or not you're looking for distressed assets in that country?
Yeah, we can answer both of those questions. The first one about the economy, it's in a pretty parlous state at the moment, I think it's fair to say. I mean, the Kazakhstan economy depends very much on oil and gas and natural resources. Probably about 80% of the GDP is those two things. So as you can imagine, in current times, it's pretty depressed. So there's pressure on the budgets, that's fair to say. But, we operate very successfully out there. And generally, I think the government is looking for businesses like ourselves, a bit more nimble, as opposed to big state-owned enterprises, to actually generate wealth in the area. Does that answer your question?
And what about distressed assets?
Well, again, I think, and maybe Nick can answer it better than me, but we have looked quite a bit of time. We've got business development, we've got a dedicated person in Kazakhstan to look for opportunities. But I think what we've found is that, and we were looking for opportunities that were closer to production and closer to actual cash flowing than we wanted. But in Kazakhstan, there's not been a lot of money spent in terms of exploration and bringing projects on. So you have to go a bit further down the development cycle, which is not something we wanted to do. But I think as a board, we are thinking maybe we have to go down that path. And we're looking to see if there's any other dumps like this or even open pit mines. We aren't restricting ourselves to just processing waste. I must emphasise that for a moment. We've got a good technical team on board, Nick and our technical director, Howard, who have got experience in underground and open pit mining. So we're not confining ourselves to processing waste. And there are opportunities out there, but so far we haven't decided to invest in one at the moment.
Nigel, thank you very much indeed.
Okay,
Thank you.
thank you.